Hello, and welcome back to Explain the Charts. Today we're taking a look at USDJPY on May 18th, 2025, and we'll be covering both recent news and diving into the chart itself. Recent news suggests a mixed bag for USDJPY. We've seen articles about the dollar facing a trust test and Moody's downgrading U.S. debt, potentially weakening the dollar's safe haven status. However, other news points to a stronger dollar due to positive economic data and a shrinking Japanese economy. Let's see how these factors are reflected in the USDJPY charts. Looking at the daily chart, we can see the price action over the past year, starting in January 2024 and going through this week in May 2025. We've seen a lot of volatility with some pretty sharp swings. Let's narrow our focus to the most recent few months, from March 2025 onward. We see a recent dip around early April 2025, followed by a pretty strong upward trend. However, the past few weeks have shown prices consolidating around the 145 to 146 level. Let's dig into the 1-hour chart to see what the short-term picture looks like. Switching to the 1-hour chart, we can see some of the recent indecision in price action. It seems like we recently bounced off of 148, and we may be heading back down to test 145. It's a strong support that's been tested multiple times. If we break through that, we may be heading down to the 142 to 143 range, where we've seen some support as well. If we head up, we've seen resistance around 148, with the local maximum being closer to 150. So, it's likely we'll find resistance somewhere between those points. Zooming into a smaller time frame, such as the 15-minute chart, the near-term indecision becomes even more apparent. I think we need more data to make a call on the near-term future. If we break below 145, and more importantly, if the daily chart breaks below it, we could be looking at an extended downtrend. However, if the 145 level can hold, we may be able to break above 150. However, I think the more likely scenario is we'll hover between 145 and 150 for a while as the market figures out what it wants to do. In summary, we should keep a close eye on the 145 and 150 price levels. A sustained break below 145, especially confirmed on the daily chart, would indicate a bearish trend. Conversely, a clear break above 150 would signal bullish momentum. For now, expect continued choppy trading within the 145 to 150 range. Keep an eye out for upcoming economic data releases from both the US and Japan. That's all for today's analysis on Explain the Charts. Remember to like and subscribe for more in-depth market breakdowns. Good luck and happy trading!